We have all seen the headlines. A superstar athlete signs a $50 million contract. The cameras flash, the champagne pops, the cars show up, the mansion gets posted online, and then, a few years after retirement, the same athlete is broke. Meanwhile, someone earning a normal salary quietly retires with millions. So how does that happen? How does someone make more money in 10 years than most people make in a lifetime and still lose it? Society worships income, but income does not equal wealth. Income is what comes in. Wealth is what stays. Today, I'm going to show you the exact trap that bankrupts high earners and the simple system normal people can use to build real wealth. Let's start with the biggest misconception. When people hear that an athlete signed a $10 million a year contract, they assume that athlete has $10 million sitting in the bank. But that is not how money works. First, taxes come out, then agent fees, then management fees, then lawyers, then accountants, then lifestyle costs. And before the money even becomes real wealth, a huge portion is already gone. Taxes are not what make high earners broke. The real problem is what happens after the money arrives. They buy the giant house, the luxury cars, the designer watches, the private tables, the expensive vacations. The lifestyle gets built around the income, and once that happens, the person is not wealthy. They are just running a very expensive machine. A normal person can live paycheck to paycheck on $50,000. An athlete can live paycheck to paycheck on $5 million. The numbers are different. The trap is the same. If you spend everything you earn, you are still broke. This is where you have to understand the difference between being rich and being wealthy. Being rich is about income. It is about how much money flows through your life. It is loud. It is visible. It is cars, clothes, jewelry, VIP sections, and people assuming you have made it. But rich can be fragile, because if the income stops, the lifestyle collapses. The mortgage still wants to be paid. The car note still wants to be paid. The insurance still wants to be paid. The maintenance still wants to be paid. The bills do not care that the contract ended. Wealth is different. Wealth is quiet. Wealth is the money you did not spend. It is the index fund account, the emergency fund, the paid-off property, the business equity, the assets that keep working even when you stop working. Rich is what people see. Wealth is what gives you freedom. Your income is what the world pays you. Your net worth is what you actually kept. Your income is the starting line. Your net worth is the scoreboard. Too many people are celebrating at the starting line while losing on the scoreboard. You might be thinking, I'm not an athlete, so this does not apply to me. But it absolutely does. Because every time your income increases, you face the same trap. It is called lifestyle creep. You get a raise. And instead of keeping the same lifestyle and investing the difference, you upgrade everything. A better apartment, a nicer car, more eating out, more subscriptions, more convenience spending, more little rewards because you deserve it. And yes, you probably do deserve nice things. But if every pay increase becomes a lifestyle increase, your wealth building margin never grows. You are earning more, but you are not keeping more. That is how someone can double their income and still feel broke. Their standard of living went up, but their standard of wealth stayed the same. What happened the last time you made more money? Did your investments go up? Or did your monthly bills go up? If you want to stop acting like a soon-to-be broke high earner, you need a system, not motivation, not vibes. A system. I call it the 70-20-10 reverse stack. Most people do this backwards. They get paid, they spend, they pay bills, they have fun. Then they look at what is left and say, I'll save that. But by the end of the month, there is usually nothing left. So flip the order. The moment you get paid, your money moves automatically. 10% goes into savings, emergency fund, cash buffer, short-term protection. 20% goes into investments, index funds, retirement accounts, long-term wealth, and the remaining 70% is what you live on. Rent, food, transport, bills, lifestyle. If 30% feels too aggressive, start smaller. Start with 5%, then 10, then build from there. The exact percentage matters less than the order. Wealth first, lifestyle second. If your future only gets paid after your lifestyle is finished spending, Your future will always be underfunded. You cannot spend money you never let sit in your checking account. Automate it first, and your lifestyle has to adjust around what is left. In sports, the scoreboard tells you if you are winning or losing. In personal finance, your salary is not the scoreboard. Your net worth is. Here is the simple equation. Everything you own minus everything you owe equals your net worth. Your savings, your investments, your home equity, your business assets, your cash, minus your credit cards, car loans, student loans, personal loans, mortgage balance. That final number tells the truth. Not your watch, not your car, not your salary, not your Instagram lifestyle, your net worth. Because net worth tells you how much freedom you actually have. It tells you whether you can survive an emergency, whether you can walk away from a bad job, whether you can retire, whether you are building wealth or just renting the appearance of wealth. Do you know your net worth right now? Not your income, not your monthly paycheck, your net worth? If you do not know that number, you are flying blind. Because the goal is not to look rich. The goal is to become wealthy. And the difference between those two things can change your entire life. If this changed how you look at your paycheck, hit subscribe. If you want to stop lifestyle creep and start tracking the number that actually matters, I created a free net worth calculator and level jump planner. It takes a few minutes to fill out. It shows you exactly where you stand, what level you are on, and what your next move should be. See you in the next one.